The stocks in Asia, Europe and America all fell in early trading as investors mulled US consumer spending, concerns over China's property sector and surprise election results in Argentina. Here in the UK, inflation's in focus, with unemployment and wages data also out later this week. Susannah is Senior Investment and Markets Analyst at Hargreaves, Lansdown. Great to have you on Global Business Europe again, Susannah. Now, there's lots to talk about, but let's start in the UK, where it's a big week for data. What might change the outlook for the economy?
It certainly is a big week for data, and of course it comes after we had that better than expected reading for UK growth that came in marginally higher than expected from April to June, growing 0.2%, better than the 0.1% expected. Now, of course, the focus turns to the inflation reading out on Wednesday, and the hope is, the expectation is, that it will continue to show that the rate of price increases is falling back. But the problem is this could be a bumpy journey ahead, because even though we are expecting inflation to have fallen in July to around 6.8%, of course that's well above the bank's target, and there could be yet another upwards rise in September. So we're looking at this kind of bumpy descent, and this is why the Bank of England is still largely expected to still increase interest rates when the Monetary Policy Committee meets again in September.
Now, you're talking about bumpy journeys, so let's look at what's moving financial markets, because there have been some wobbles in Argentina after that unexpectedly right-wing election result.
Yes, there certainly have. And the Argentine government has now devalued its currency by almost 18%. And the benchmark interest rate is actually going to be hiked 21 percentage points to 118%. It really does outline the scale of the crisis in Argentina, which has been exacerbated now by this shock result with Congressman Javier Milei, a far-right libertarian, actually winning the primary election. Still, the outcome is uncertain when we reach the presidential elections, but it's certainly thrown the country into fresh disarray.
Well, those numbers you just threw out there are really astonishing. 118% interest rates, 18% devaluation of the peso. But while we're talking about currencies, how about talking about the ruble in Russia? What's going on there?
Yes, so again, we're going to have this kind of emergency meeting by Russia's central bank after the ruble fell to its weakest point in almost 17 months. It has again been a pretty volatile ride for the ruble, of course, plunging dramatically after Russia invaded Ukraine, but then regaining form. However, as those sanctions have hit hard, and actually there was an exodus of cash out of the country following that of Wagner uprising, that short one, will be hiked to try and lift the ruble out of where it is right now. So really going past the psychologically important level of 100 to the dollar earlier today, which is why the central bank, I think, is stepping in to potentially take action.
And of course, somewhere else that everybody's always watching to gauge the mood of where the global economy is going is China. Now, we've already heard in the programme how they're looking to increase foreign direct investment, trying to level the playing field for outside investors. So the concerns perhaps from investors about maybe a more subdued than expected economic recovery.
Absolutely, and right now concerns are centred around the property sector because we're seeing that new bank loans have tumbled in July, and other key credit gauges have also weakened, and that was even after policymakers cut interest rates and promised to roll out a lot more support for the economy. You talked there, Juliet, about that support to try and encourage inward investment. But there is still real concern about the fragile property sector. One of the biggest property firms defaulting on some of its debt repayments. And so really that's been the focus. That's affecting, say, the FTSE 100 today, with mining stocks falling back amid expectations of lower demand for metals if the Chinese economy slows down. And of course, I remember there's a flash showing last month that actually China had entered a deflation scenario. Now, we don't know how long this will continue for, but certainly there is other data out later this week, retail sales, industrial production, that data will be very closely watched to try and get a bit more of a handle on just how fast the Chinese economy is slowing.
Susannah Streeter, always great to get your insight.